All right, so we have a quorum. This is the second half of the morning session for Senate Natural Resources and Energy. Today is Wednesday, February 17th. It's 10:08 a.m. Good morning, Ms. Collins. Thanks so much for coming back in. You're in the middle of a laboratory with a lot of beakers bubbling away. There's a lot cooking, and we'd love to learn more about the governor proposed budget included a $16 million appropriation to VHFA. And so we've talked a little in the past about it, but now we wanted to get in under the hood a little bit and understand how you were thinking of deploying that money. And you know, and let me also put on the table that we're talking about a program here that will operate for a decade or more, probably decades plural. We know there's a lot of housing stock to get to. And the governor's proposal is a one-time allocation to VHFA. So besides understanding this particular proposal, can you, if we get there, can we talk about how that might fit into a longer term future as well?
Thank you so much. I'm Maura Collins with Vermont Housing Finance Agency, and those two things are exactly what I came prepared to talk with the committee about today. That said, I'm feeling pressure with time. I know you're running a little late and covering this in the detail I think you're interested in. I may talk fast, so I'm very comfortable. If we were in the same room, I'd be very comfortable with you interrupting me. So please still do that even though we're over Zoom. I have 3 children, so I'm very used to being interrupted. I'll put it that way. So I'm going to share my screen and pull up some slides that the committee has. Can you just confirm that you can see this?
Yes, ma'am.
Great. I was listening to the committee's discussions over the last week, and you had some questions about bonding. So I wanted to start with a quick bit of refresher on your bonding 101 that I'm sure you all remember from undergrad. In the 70s, the federal government started helping states support certain public goods. And so the feds created something called private activity bonds. You've heard about this last week. These are bonds where the investor does not need to pay taxes on their earnings. And that allows the investments that get financed through these bonds to have to pay lower than typical interest rates. And private activity bonds can be spent on all sorts of good charitable purposes, such as affordable housing, which is why the legislature created VHFA to issue these bonds to create affordable housing. Economic development is another purpose that's eligible. So y'all created VITA way back when. Higher ed is another good activity we want to see. And so y'all created VSAC, and we have the bond bank in the state that helps municipalities tap into these resources for schools, roads, bridges, and the like. So typically, if I were giving you a presentation on VHFA, I'd be talking about how VHFA does issue private activity bonds. You can see that we've done just under $4 billion in bonding, mostly through those private activity bonds. They are limited for the state. This year, Vermont had just under $325 million in bonding capacity through this. But I want to compare that number of $325 million to the roughly, 63 million the legislature allocates in the Capitol bill each year. So there is a limit on private activity bonds, but it's a really high limit, and we haven't been close to it in quite some time, especially since the feds changed how higher ed financing is done, and now VSAC does not bond using these bonds to the same extent as they used to. In addition, unused private activity bond cap can be rolled forward. And so the treasurer could report on how much we actually have available, but I do believe it's well in excess of that $300 million number I just said.
Okay. Can I ask a quick 101 question?
Yeah.
Is the full faith and credit behind those private activity bonds? What's the level of state involvement?
I want to stick to the VHFA
why
bonds.
Why do we even have a cap? You know?
Yep. I want to stick to the VHFA bonds because I'm always cautious about talking about how VITA or other entities, if those bonds get treated differently. But no, the full faith and credit is not behind the housing bonds that get issued. Instead, the treasurer has opted to put moral obligation of the state behind some of our bonds, but not the majority of them. It's actually quite limited what we have the moral ob on. And that the difference between full faith and credit means if the state were fully backing these bonds, it means they would end up on the state's balance sheet as an obligation of the state, the full amount of the bond. Instead, the moral obligation means that the state has the moral obligation, but not legal, to fund 1 year of the debt service on the bonds. And you have to replenish our savings account where we have to hold 1 year of what we pay out to investors. And then it goes from there. So my main point, yeah. So my main point though is that we are not proposing to use private activity bonds for what we're talking about. And the reason is because private activity bonds are tax exempt, and the weatherization loans we're talking about would not be eligible for tax exempt financing because one of the rules of private activity bonds is that whatever's created with them needs to be available to the public and generally available to the public. And we're talking about financing for private homes. These will not be available to the public. Now, one could say, well, but how's that different than affordable housing? But if you think about it, that affordable housing is available to the public in the sense that anyone could move into that rental housing and it's not limited. It is generally available to the public freely. So any bonding that we're proposing here would be on our balance sheet, which means that we can float the bonds and the debt without the debt appearing on the state's balance sheet, which is very important to the state because the rating agencies really get nervous if the state runs up too much net tax supported debt. And they look at how much taxes y'all charge and they look at how much debt the state has committed to, and they want to see a strong ratio there. So if you run up too much debt and you don't have the tax revenue to pay for it, then the state could be at risk of a potential downgrade. So when we're talking about the bonding throughout my presentation, we're talking about this being on VHFA's balance sheet. That said, VHFA, as I say in my slides, has a long track record of doing this for single family mortgages, a long track record of doing it for multifamily apartments, but we do not have a long track record of doing this for weatherization projects. We're essentially starting fresh in the market with this investment. And so it's going to take a couple years for the rating agencies and the investors to start to trust us the way they trust us to make mortgages and to make these multifamily apartment loans, development loans. And so I'm going to talk about that more later, about how as we build a system for the next 10 years, this is going to get more and more attractive over time to rating agencies and investors as we prove ourselves worthy in that way. So a final question that came up last week was, could we refinance the housing bond from 2017? And is that going to get involved? And is that part of the bonding that we're limited to? And that is completely separate. That is untouchable. It's a different model. And just like we're not refinancing any of VHFA's mortgage bonds or multifamily bonds. We're also not touching the housing revenue bond that VHCB awarded to projects a couple years ago. So the model that I spoke about to you all a couple weeks ago with Neil and what has been proposed by the governor is essentially this funnel that Senator Bray keeps speaking about. And this slide lists a few of the sources of funding that could be considered to support weatherization in Vermont without cannibalizing existing programs by shifting their funding to this effort. Meaning you're not going to see the Weatherization Assistance Program listed here, the grant money that OEO allocates. You're not going to see LIHEAP mentioned here, nor Efficiency Vermont's existing funding streams. We're looking for new funding opportunities that could build this out and bring us from this one-time $16 million to any of these other ideas that you see here. Now, I have only started testifying with you all last year and this year, but I have to say that I really appreciate your committee because you keep coming back to fundamental questions and you ask the hardest questions for a witness, which are the easy, simple ones, which are things like, what problem are we trying to solve here? I've heard you all ask that several times and grounding yourself in that question. And the answer is, we're trying to create that long-term, sustained, growing funding source for weatherization of low and moderate income homes and apartments. That's what the Act 62 report called on the state to do. That is what I've heard lots of your witnesses testify is needed. That's what we're trying to do. Long-term, sustained, and growing funding source. What we have already and don't need to recreate is the robust weatherization network ecosystem, if you will, that's in place to do the weatherization work. So that's at the bottom of the funnel. That's that ball at the bottom that we're going to fund. We're going to fund that existing network and system that you've heard works so well, frankly. Can
I check in on something right there?
Yeah.
Sorry to interrupt, but you just said something that sounds very crucial that I want to make sure I heard it right and not misunderstanding. You said for apartments. So this goes back 2 or 3 minutes to you saying the public good piece needs to be that the general public has access to it. So rather than doing work on private homes where that benefit is sort of, I don't know, someone might say, well, that's to the individual. When you're doing the portfolio of rental properties, because people are going to go in and out, you're creating a public asset, even though those properties are privately owned. So is that a distinction that you were making, and or did I mishear or misunderstand?
No, because I know the committee had been talking about private activity bonds and seemed concerned that there may be limits to it. And so how would this maybe eat into those limits in the state? But again, we're not going to be using private activity bonds here, tax exempt bonds, so that private use and all will probably not apply. So,
okay. And when you just mentioned for apartments now, is that a targeting choice, or is that sort of a financial constraint in terms of appropriateness? Like you wouldn't weatherize personal property, individual homes.
We plan on spending the money that we hope to create through the bonding effort here in this initiative is designed to go to both homeowners and landlords for the benefit of renters. That is not a funding reality. That is not that we need to have the right mix of homeowners versus landlords. That is a policy mission-driven decision, knowing that if we're focused on households under 120% of area median income, we need to make sure that we're serving the lowest income folks, and they may be renters or owners. So that's more of a policy decision and agreement among lots of players who want to address this. So So far, Vermont has had neither the funding vehicle or the growing funding sources to ramp this weatherization work up to scale. Again, we have all the players, we have the partners, we have a lot of great programs. What we need, frankly, is the money. It's always the question. So what's been proposed by a collaborative group of organizations has been to change this and to use financing to support a system that could scale to meet the needs of the state as we work to retrofit more homes. So we could go through, you have taken a lot of testimony on what several of these funding sources could do. And frankly, I don't want to go down the rabbit hole of which ones are good and bad and which ones you want to prioritize. I'm trying to give the image that wherever we end up as a state, if they flow together and pool together, there is a benefit to just that fact of pooling these resources. And the reason is because there's so much variation in these funding streams. Efficiency Vermont has testified very clearly that their funding through the forward capacity market is going to be reduced going forward and does not look like it will return to the high points that it had. Appropriations, I think we all know that a $16 million seed funding this year may very well be zeroed out next year. There's no reliability to a lot of this funding. Right now, under other federal program funds, we're all kind of hoping that our congressional delegation is going to be able to help the state with some kind of additional federal funding. There's talk about stimulus bills at the federal level, as well as infrastructure bills, Biden's plan to retrofit millions of homes across America. That money will be start and stop money and hopefully be available. And we want to have a vehicle where that can go. But because of the variability of all these funding streams, by pooling them together, you create more of a steady stream. As one goes up, another may be going down. And there's a benefit to that evening and flattening.
Right. Can I chime in just to say,
yeah,
that's exactly the construct we're after. It's like the ecosystems are robust to the extent that they're diverse. So that's true of the whole pool of providers for weatherization service. We're also trying to create an ecosystem of funding that lives above it to go to it.
Exactly. And the workforce will, I think we've heard this enough from your witnesses, the workforce will only develop if they see that funding is steady and stable. And customers will only talk to their neighbors about what they did if those programs live on for another year and are not always pilots that, oh, I got the deal a couple of years ago, but that deal doesn't exist anymore. So pooling these funds together can also create some leverage so that each dollar is going farther. And we know that there are many aspects that are critical for success. And I'm going to just I know you know this, but I just have to keep saying it. There is the funding, which means the financing and incentives, but there's also the workforce development and the individualized assistance to customers. And when we think about the mental image of a three-legged stool, by pooling funding, we ensure that none of those legs is too short or too long for the others, meaning we can grow them all equally so that we don't end up with a whole bunch of low interest loan money, but no workforce to do the work. We don't end up with tons of case management assistance to help homeowners, but no incentive programs that make the program appealing to them. So what we are talking about is, as I just said, financing and grant incentives, workforce development, and individualized assistance to customers. Those elements are frankly not really up for debate. I hear, and please correct me if I'm wrong, but I hear broad support that we need to make sure that we have financing, grants, workforce development, and concierge services, case management, whatever you want to call that, hand-holding, which includes marketing and outreach, I will say. I don't hear debate about those items. Where there may be a little debate is the numbers that I put on this slide. So what I'm providing here are rough estimates of what could be needed for different uses, but we are still in continual conversations with Efficiency Vermont, NeighborWorks of Western Vermont, utilities, banks, credit unions. Tomorrow I'm meeting with all the community action directors. And we're still trying to nail down what these actual, a firmer budget here. But these are the numbers that we've proposed to start the conversation. And what I want to be perfectly clear is that I think that it showed tremendous leadership to have the governor put forward such a dramatic one-time funding of the $16 million. And it shows the commitment and the need in the state to reach all corners of our state and invest in our homes and communities and our low-income Vermonters by helping them build equity by investing in their homes. But what the governor proposed is not long-term sustainable funding. He didn't propose to weatherize 120,000 homes. What he did was put his support behind this model that I'm explaining that we're trying to build here. This is seed money. This is the start of doing things differently in Vermont. When I say doing things differently in Vermont, I don't mean using different players or weatherizing differently or coming up with some new technology that you haven't heard of. I'm talking about doing something differently with our dollars and our financing. So you all could look at this $16 million appropriation and you can decide to spend it dollar for dollar in the same way the state has always done. But by doing something different with the 12 million that I've earmarked for financing and grant incentives, we can start to build a financing model. And there's an opportunity then to grow that into something bigger over time. I'm going to go into what that bond would look like next. So I'm sure you have questions about that. I'm looking at the time and again, feeling a little rushed. So I'm going to keep going if that's okay. I want to point out that
Mr. Chair, I too appreciate what the governor has proposed for the purpose of saying it is important and it is worthy and it is necessary. I question how we can use money which is sent to us designed to get into the economy today and to stimulate commercial activity today and which should not be put in the bank or put in individuals' savings accounts or used by firms to buy back stock, but money that should be spent in Vermont today. And I'm looking for the proposal, if we're going to use that money, that meets that goal of spending money now. Thank you. Witness. I want to say, I think you must have taken my class when I was in 8th grade because I understand everything you're saying. Thank you.
Okay. And I understand what you're saying. And in my next 2 slides, I am going to hopefully have you have the same understanding and confidence that when I say we're building something for the next 10 years, that doesn't mean that we're putting it in the bank for the next 10 years. I'm going to explain to you how actually we're proposing to triple the amount of money in the economy spent on weatherization in the next year if the workforce is there to support it and the rest. I'm a little nervous. I don't want to actually talk about
I'm going to be quiet and listen to it. Go ahead.
Yeah. So before I move off this slide, I just want to explain this final bullet, which is a little jammed in here, that it talks about additional structured leveraging opportunities. What I want to explain is that another benefit of going with one financial steward at the top of this funnel is that I am young, and that means I'm very naive, but I'm not ready to give up on the fact that institutions working with the money, I think there's still an opportunity for us as institutions to work better together to spread the money across customers in a different way, meaning not have a low income customer have to apply to weatherization assistance program and to a revolving loan fund from their local homeownership center, and come to whatever VHFA is creating and put the burden on them. But I'm really hopeful that there are ways, and we've started these conversations with OEO and with ACCD, and next week I'm going to be talking about it with the homeownership centers, about how can we as institutional actors behind the scenes have our money work better together, so that when the customer has a scope of work of what needs to be done, and some of that is going to be weatherization, and some of that is going to be home repair and asbestos and vermiculite and all the things that needs to be done, how can we behind the scenes work better so that they aren't figuring out all these programs, but we're having our money work better together? And that's only possible if you pool these funds and you have one financing institution sort of responsible for laying all this out. So how could the financing work? What we're proposing is essentially modeled after what the legislature created in the 70s with VHFA, which was what we do with our affordable housing lending, which is a standardized loan program building off of the wonderful success that Efficiency Vermont has modeled. How can we look so that lenders can tap into an existing loan program? Lenders have told us that securitized loans for $8,000, $10,000 is too much work. They're administratively burdensome. They don't come with case management. That doesn't come with marketing and outreach. And we know that just under half of the lending institutions in Vermont don't offer energy loan programs. So how do we, part of bringing this to scale is having every bank and credit union in the state be able to offer this kind of weatherization program without them having to create the forms, the underwriting, and all the rules and regs. So if we can create that, then when all that money flows into that funnel, there's a standardized program, which I hope will mean that more lenders would offer it. And we're essentially creating a secondary market where individual credit unions and banks could do what they do best. We heard Tiana earlier say that utilities don't make for good banks. You know, how do we let those lenders, more lenders participate, but that we can use the money that supports weatherization to fund those loans? And the bond that I'm going to show you on the next slide that we are modeling has the benefit of potentially serving 3 times as many households as the home energy loan program served at their high watermark in 2020. We saw that there was dramatic uptick in that program of 880 households in 2020. We could triple that by having the $12 million of the 16 that's going to financing and incentives turn into a 16, maybe an $18 million bond. And so the model is, as I said 2 slides ago, we're thinking about using $12 million for financing and incentives. And that would create 16, I'm nervous to say 18, it's probably only gonna be 16 to $18 million in lendable proceeds. And as you can see, the split of the $12 million would be that a lot of it, $8.5 million of it would go to grant support for customers. And the other $3.5 million is going to do those interest rate buy downs, issue the cost to issue the bonds, a loan loss reserve, and things like that. So turning $12 million into $18 million is pretty impressive, because let's just say that that's $6 million of activity that otherwise would not be available. It is a modest improvement. We're not taking 16 million and able to turn it into 50 million necessarily. But again, it's important that we not put all of this 16 million into financing and incentives, because we need to build up the workforce. We need to have that case management work. We need to do those other things. But as I said, one of the real benefits is that it's going to speed up the impact of these investments, meaning instead of waiting for that additional $6 million to come around in appropriations in the future, those homes are being touched now and those savings are being realized now. And those greenhouse gases are being not used now. And every year that the state supports the development of this model, that ratio of funding to lendable proceeds will improve and grow. So we've built this bonding model on Efficiency Vermont's program. And so this is different though, because we are looking at using bonded funds as the source of capital instead of private dollars. But I can't say this enough. We are still really early in our modeling here, and I can appreciate the legislature's need for clarity. And I promise that we have lots of people from a lot of different organizations working on this. But we are on week 3 since the governor's budget address, and VHFA is too good of a financial steward to move too fast with this. So we're continuing to develop this with our financial advisors and others, but there are still a lot of steps to take that we haven't begun, like talking with rating agencies about how this would be rated and potential investors, and talking with local banks and credit unions about possibly selling these bonds locally, which may get us even a better return for the money. And maybe the numbers will be better. You know, when the state did the property transfer tax bonds, the housing revenue bonds in 2017, you all gave VHFA the authority to issue the bonds, and you set general parameters about the income targets of who should be served, but exact results of what would happen were not in statute. And I'm proud to say that what you all thought was going to be a $35 million bond turned into a $37 million bond due to our patience with timing the market and the structure we took and lots of other things. So these numbers are rough and early, but we really won't know what the lendable proceeds will be until we sell the bonds, till you go to market. So this, where the real benefit lies with this whole model is that, as I said, it will take a couple years of issuing bonds like this year after year before we really have the confidence of the rating agencies, the investors, and as we build out that full secondary market that lenders can rely on and build on, and we'll have that economy of scale that will help smooth out the startup costs and all that. So the real benefits start coming 3 or more years after this all begins. But a successful 10-year model requires additional funding to support this. Okay, so going back to the funnel image I had on a slide, there will need to be more infusions of money from whatever sources to help support this. But by the time we hit year 7, 8, 9, 10, this can be self-sustaining. And that is critical if you really want to bring this to scale, because while we're going to do our best with weatherizing homes with the technology that we have today, your homes are just like mine, which means every 10 years or so, you do need to do something else to keep up with the technology, the energy efficiency opportunities, and the rest. So in conclusion, I'll say what we need is for you all to create the authorization for VHFA to bond and partner to access these funds. We need your support of the $16 million investment, and maybe not formally in statute, but it would be great to build the support for the framework to develop this model. There are so many other benefits to having VHFA in this role that I could go on about, but I know I'm over on time. So I'll just remind you all, since I don't have the opportunity to be in front of you often, that we do have a 47-year history of doing creative, innovative approaches to financing homeownership and creating equity for Vermonters. And weatherization is an energy-specific home improvement program that builds equity, plus all the climate benefits that you've heard about. We have an existing strong network of financial partners, which includes banks and credit unions that we've already been talking with to learn from them and to try to generate support from them. And we as a financing agency, we are not in the business of weatherization implementation. We are not on the ground. We are not a contractor. We don't run these programs. So we can serve as a fiduciary role to develop the flexible funding streams to serve all the weatherization programs through this central source of flexible funding. We are a housing funder. We would not be the recipient of this funding. And therefore, we have entire departments at our agency that are set up to routinely play the role of financial steward and compliance management. And so while we've lent out almost $4 million in bonded funding, we also award $4.5 million of state resources every year through the state tax credit program. And we give out over $30 million a year in federal housing tax credits. And so this role is exactly the kind of role that the agency is used to playing. And we're really excited to play it with this weatherization program.
Great. Well, thank you very much. And Senator McDonald.
You opened your remarks by saying that utilities were not good banks. Are you closing your argument by saying that you are, in fact, a good bank for this job?
I do. Yep. That's exactly what I'm trying to say. We have a model of doing this. We did it for affordable lending. In the 70s and 80s, banks and credit unions were not doing a lot of this. Now they are. I'd like to grow this in the same way so that we can expand this and bring it to scale.
Thank you.
Okay. One thing I would put into your onto your to-do list for the conversations I know you're having and will continue to have with all the people in the ecosystem energy labeling, because part of where we keep running into some resistance is that, and especially when you're talking with the banking community, if they can't see the value of something, we end up with, I would say, some irrational practices, and it creates an obstacle. People, one of the comments we've heard many times is, we've been told we'll never recover this money. Why should we invest it in our home? We're not sure we're going to be here that long. And one way we're looking to address that is to be able to have a quantifiable energy rating, an MPG sticker for homes, so that over time, and I'm going to say over time, in caps, is people will come to expect that kind of information, and it will help make a marketplace perform better. Now, when you shop for anything that uses energy other than a home, you can find out what its energy use is through a certified neutral third party, not someone's notes on what it was like to live there when they owned it. So I'll just plant that one and leave it alone. Any other questions for Ms. Collins? I know we went a little fast, but that was perfect for having a sense of the proposal. And we continue to work. Senator McDonald, last question to you.
So if we accept the argument that you would be a good bank for this circumstance, often we start programs for good reasons and with good banks. And we find that the industry that we started collapses because the price of oil changes, or a large buyer has a fire and it's destroyed. And we've put into place a lot of purchasing of equipment and resources to carry out the purpose that this new bank is going to support. What is our role in seeing that after the first couple of years, the private sector that's purchased, educated people, or bought the equipment to carry this stuff out isn't stuck holding the bag when the next legislature, who will undoubtedly may have different priorities and different things, is asked to fund what we have not funded over the long haul. Do we just get to our bank and then wipe our hands and say we're done, or do we have an obligation to fund this over the long haul in anticipation that future legislatures no longer finding it a priority?
The model that the assumption we're working under is that there is no future obligation of the state after you appropriate this one-time $16 million, full stop. That will be very important to my board member, Treasurer Pierce, to make sure that you understand that and that the rating agencies understand that. This is a one-time appropriation, and we are building this bonding model based on that infusion of funding and the loan repayments of the people who get these loans, who are going to be paying back these loans through their energy savings. So your point is a valid one. When the state commits to ongoing paying the debt service on the bonds for the next 20 years, for instance, we did that with the housing revenue bond. That is an excellent question. About 18 years from now, will we still have those property transfer tax revenues to support that bond? This is completely different. The difference is that with the property transfer tax bond, as one example, it's only $2.5 million of appropriations, and it created a $37 million bond. I'm modeling a $12 million appropriation that one may say is only going to generate $16-18 million. It's not the same order of magnitude, but the reason is because we only have one-time money that we can put into it. So it's not going to go as far as if you all signed up for a 20-year commitment to be paying this bond going forward. But you're not doing that. That's not what the governor has recommended. And it's not what the treasurer, I believe, would support, because we're not adding to the state's liabilities with future tax revenue, but instead we're just using this one-time money. And that's why it's a great improvement of what it's better than, we're moving away from this dollar in, dollar out model I'm talking about. But it has, so it can be leveraged larger, but it does not commit future legislatures to anything. And frankly, the risk is on VHFA. So it's not on the state. This is on our balance sheet. You talk about the state's full faith and credit, which I said is not behind this. It's VHFA's balance sheet that is at risk. So that is the role we play in the state as a mission-driven lender that the legislature has supported, but we do not receive any appropriations to do this kind of work, and yet we are taking on the risk of this endeavor.
Thank you for your answer to a complicated question. Thank you.
Right. And, you know, if we were to, since we are interested in decades of work ahead, it would also, I think, probably not make sense to have you doing all the outreach and overhead of building, you know, looking into workforce development, creating the programs with banks if there were not to be another round. You know,
I completely agree with that. Yes, that is why I'm saying, and it may be through state appropriations, it may be through federal funding, it may be through a thermal benefit efficiency charge. It could have a lot of looks and feels, but continuing to support this model would be critical to really getting that bang for that buck that we're doing this year.
Right. All right. Well, thank you for coming in and really helping us better understand the proposal. And I know it's a work in progress. What we're doing in this committee is also a work in progress. So we'll all keep pedaling our bicycles as fast as we can. and crossover is about a month away, and we'll make it. And we'll have a construct, I think, that will be flexible and build towards, you know, the punchline for all of us is long-term sustainable, robust funding.
Yes.
That's where we're heading. Okay, so thank you very much. I'd like to we're going to switch gears here, and we have Mr. Dickerson, who's been waiting patiently. Thank you very much, from JFO. Sorry for the delay. Hope we're not messing you up for getting to another committee appointment. If so, let us know and we can talk about rescheduling right now.
I'm available, so it's not a problem.
Okay, so I'm sure you've been using your time productively while we've been taking testimony. So we had asked for the help of, and thanks Senator Westman for leading on this, asked for the help of JFO to evaluate the different funding proposals that are in the governor's budget, just so we can keep track of dollars and cents, because at a certain point in the near future, we'll be walking down the hall to talk to appropriations about what's coming in the quote unquote fast track budget, as well as in the long-term budget. So this will be helpful to us if you can share what you've assembled. Thanks very much.
Sure. I have a slideshow and I will share my screen. And you know, I'll say that I've put the numbers together, but I haven't had time to scrutinize them a whole lot as far as, you know, what's the best use of this one-time money. You know, so I'll go ahead and show you the numbers.
Well, great. And so that's perfect. Don't, you know, it's like no problem that you haven't had that opportunity. For now, we're just going to we want to get the lay of the land straight.
Okay.
And I think we'll end up with questions where we'll want to work with you to dig in deeper as you suggest.
Okay. So it's 25 million total that was in the governor's weatherization spending proposal. You've just heard about really the big piece, the 16 million, and my slideshow is really focused on the other two areas, just giving a high level overview. I figured I didn't want to risk stepping on VHFA's toes on the 16 million. But in total it's 25, and the other two pieces are 4 million to DCF for the Home Weatherization Assistance Program, with up to 150,000 of that being available for vermiculite remediation. And that amount is meant to be spent over 2 fiscal years. So it would start in 22, going to 23. And then the other piece is 5 million for BGS to expand an existing program, the State Energy Management Program, to allow for municipalities to utilize the two funds that exist within that. And I'll touch on those. And to my knowledge, I think that specifically pertains to FY22, but I imagine that, you know, unused funds would be utilized in future years.
Okay.
From that.
Can I add one more appropriation to, or proposal to recommend to your list? And that is, the governor was talking about a $10 million allocation for low income renewable energy.
Okay.
Yeah.
That might have been in, I know there were different facets of the one-time funding proposal, so I might have missed that. I think I just keyed in on weatherization, which I was probably my mistake.
Right. Yeah, no, it's fine. We're again, it's all a work in progress. And then I think the last collection of funds are related to transportation, since there's such a nexus to both the cost economically and in terms of greenhouse gas emissions. So I think where we'd like to get as we visit with you again in the future is the weatherization piece, the 10 that's going to low income renewable energy, as well as the transportation piece. So all those, we're back to a 3-legged stool.
Okay.
Thank you.
That was perfectly fair. Let's see. Oops. So on the DCF weather assistance program, I just really wanted to give a really high level overview of what, you know, the existing program does, and I imagine that the additional 4 million would serve the same purposes. I haven't seen any proposed policy that would suggest deviating or expanding. So what the existing program does, it allows for eligible owner-renter households to receive weatherization assistance. And those eligible households, you can see sort of what the metrics are. If you're at or below 80% of median income, if someone in the household receives supplemental security income, or someone in the household receives seasonal fuel assistance, or has received or is eligible to receive. This I pulled off of the weatherization program website. It's pretty boilerplate. And then the types of services that are available are the comprehensive
And those
assessment.
were, sorry, quick question. Those
Sure.
were OR'd together? They're not ands, they're ors?
Yes,
Those criteria. Okay.
I believe that's the case.
Yep.
And so the types of services are the comprehensive assessment of energy-related problems, building diagnostics, and then full service retrofits. The ongoing grant-specific funding that is proposed in FY22, so this is excluding the additional $4 million, is about $12 million, and the sources, and it's level funded from FY21. And then the funding sources are federal, and then the Home Weatherization Assistance Special Fund. And so this $4 million would be from the general fund, and it would supplement that existing ongoing grant funding. So it'd be about 16 million total in FY22, but $4 million of that is one time, and so in 23, at this point, I would assume that it would go back to the 12 million from the federal and special fund mix.
And just for your knowledge, I think they've talked about it as they will split it and roll forward two, and they'll do 2 and 2 for 22,
Okay.
23. Yep.
Now jumping to the state energy management program, this is a program within BGS to facilitate energy improvements in state buildings and facilities. And there are 2 revolving funds that provide the funding need for those improvements. One of them is the State Resource Management Revolving Fund, which is for resource conservation measures. And then the other is the State Energy Revolving Fund for energy efficiency improvements. And then currently this program is only open to state applicants. And so the governor's proposal would allow municipalities to now take advantage of that funding.
Okay. I have another really quick question on that one.
Sure.
I'm not sure I know the distinction between resource conservation measures versus energy efficiency improvements. And if not, then we can bear down on that and sort it out for ourselves. But do you happen to know off the top of your head what the distinction is there?
Honestly, I don't. And I read through the annual reports for these 2 funds, and I don't know that they clarified it for me. So I can certainly get an answer for you and get back to you, but I don't have an answer for you off the top of my head. I apologize for that.
No problem. But Senator McDonald?
What does state applicants mean?
That would be the improvements have to be under current law to state buildings and facilities. So the applicant pool would be, departments, agencies, other state entities that.
Okay, we're not talking
using
about
state
second
property.
homes or fraternity houses at UVM. We're talking about, state agencies. Okay,
Yeah.
Thank you.
So the final 2 slides are really just sort of oops, why did it jump back to the beginning? Sorry. Are just, what I pulled from the annual reports for the 2 funds, just to give you a sense of, how much activity is happening and how much money is flowing out of the funds. And so the State Resource Management Revolving Fund, there have been 58 projects funded to date. I believe this program was created in it was either 2015 or 2016. So it goes back about 4 or 5 years. So 58 projects funded to date. 4 projects were funded or approved for funding in FY20, and the cumulative cost for those 4 projects was about $28,000. And I briefly looked at the details. I think for 2 of the projects, at least, it was, putting LED bulbs in buildings. So it was pretty small, well, pretty straightforward, I guess. Nothing too extensive. The fund balance, well, activity-wise, there's been about 2.4 million invested from the fund to date, and there's about 260,000 available as of the release of the report on January 15th, 2021. And because it's a revolving fund, it's, the agencies that are able to take advantage of the funding source to make these improvements are paying paying back into the funds for the improvements through, I think, their fee for space charge that is administered by BGS. State Energy Revolving Fund, 13 projects funded to date. There were no new projects funded in FY20, and the reason cited in the annual report was just pandemic-related logistical challenges, but I didn't see any additional details. So I don't know exactly what that means, but I understand it because I think most state entities have had similar problems, and it's been pretty crazy, but it is what it is. And a similar amount has been invested from the fund to date, about 2.3 million. And this fund is actually a credit facility up to 8 million that's available at the treasurer's discretion, and per the annual report, about 5.3 million of that is currently available for new projects.
Can I ask a quick question there while we're on this side? So the appropriation is a one-time 5 million, but are you saying that the program currently has 5.2 available to be allocated to projects? I know it's expanding who's eligible, but I also thought, my impression was that in addition, it also made sense to put more money in to be able to go fund projects. But I'm just trying to make sure I understand what the need for creating funding that could be loaned out is.
Sure. It is concerning the State Energy Revolving Fund. There is 5.3 million available. What's not clear to me at this point, and I think where either, well, I could get you, I could try to get you an answer offline, or if you bring BGS in, and it's something that I would recommend seeking clarity on is the 5 million that's being proposed by the governor for, I guess, a new fund that would be created within this existing program specifically for municipalities, or is it to further seed the 2 existing funds and then expand those uses for municipalities? And that I don't have the answer for you on.
Sure. Well, since you're going to talk to them about the distinction between the 2 programs, could you follow up on
Sure.
that? And
I will do that.
With you as our advocate analyst, it would be helpful if we had your sort of guardian angel role on chasing down the money for us. Thank you.
Sure, no problem. So that's really all I had for you. Like I said, I wanted to give you the amounts, and then just really touch on at least two of the uses at a very high level. And I've gotten a few questions from you, so I'll get those answers back to you as soon as I can. But I'm here to, if you have any other questions, I'm happy to reach out to the agencies. I was told that the DC Commissioner, Peter Walk, is the primary, I guess, point of contact for the weatherization initiative. But I know you stated that, there's additional money wasn't specifically a part of the weatherization, but really does fall within your jurisdiction. And so I'll add those and I'll figure out, who I need to talk to for those other sources, the 10 million and then the transportation money.
Great. I think that will be helpful to the committee in the next couple of weeks. I suspect we'll want to visit with you a couple more times and just trying to get real clarity on, like any recommend, we're trying to vet the numbers and think programmatically about the choices that are already in that recommend compared to what we've been working on and how we think, either they could be perfect as is, or we might say that we see an opportunity that seems more impactful from our perspective. So that's helpful. Any committee questions for Mr. Dickinson other than from anyone other than Senator Campion? Okay. He's not allowed to ask questions of JFO when they're in the room. It's called the JFO protection policy. All right.
It's just helpful for me to create a picture.
Yes. So Senator Westman, since you are on approach, are there particularly, you're looking at budgets all the time, is there anything else that you want to add to the list of things we want to know?
No, I think the solar project development, that's the 10 million, really creating a package at 35 is important to handle. I would just say in the last presentation we had in the breakdown with VHFA, as they talk about individual assistance to customers, I wonder how that relates to the counseling that we've heard from the CAP agencies. So there's a whole bunch of pieces of this that are all bumping up against each other, and I don't want to recreate stuff.
Right.
Yep.
I think if the CAP agencies are already doing counseling and helping individuals, how can we make sure that VHFA is good at organizing their money and going to bond and doing that? The CAP agencies aren't good at that. But talking to low-income Vermonters about their situation, I think the CAP agencies are really good at. So how does that relate?
Right. And I think actually we rescheduled our meeting with all the community action agencies from tomorrow to Friday because tomorrow they're meeting with Ms. Collins and VHFA.
Right.
So it'll be great timing. They'll just have had that meeting when we talk to them on Friday. And okay, anything else? So, and Mr. Dickerson, thanks. The transportation piece too. I don't, there is a, as I understand it from Michelle Boomhauer, there is language that's been brought to house transportation that may be the shortest route to knowing how many dollars and what it's for. We just had a very high level walkthrough, sort of bullet level only, about what kinds of things are being contemplated there. So.
And I just say to you, Dan, when you get that all together, I totally appreciate the words and I can do that. But what I end up doing for myself is scribbling out on a piece of paper to create a chart. Is this is going here, this is going there. So if you could someplace do that for me, that would be helpful.
Okay, will do.
Okay, great. Thanks so much for jumping in, Mr. Dickerson, on helping us get a handle on this, and we'll look forward to continuing to work with you on this. All right, any committee questions before we lose JFO for the morning? Okay, thanks again. And with that, we're switching the channel. Each year, the Vermont Housing and Conservation Coalition has an annual day in the State House, and we because their missions are so closely aligned with the work of this committee, we always get an annual update from them. And so that's what we're going to be doing for the balance of this morning. Good morning, Mr. Huffman. Thank you to you and your colleagues coming in. I'm going to turn it over to you as like the MC for your group. And we're happy to hear about what has been going on in the last year and what you're looking forward to doing.
Terrific. Well, thank you, Chair Bray and Vice Chair Westman, Senators Campion, McCormick, and McDonald for your time and for everything that you're doing to help Vermonters through this really difficult time. And we really appreciate your fitting this into your busy schedule in the midst of a lot of other things. So for the record, my name is Phil Huffman. I'm the Director of Government Relations and Policy for the Nature Conservancy here in Vermont. I'm here today in my role as one of the co-chairs of the Vermont Housing and Conservation Coalition. And I'm really pleased to have three terrific witnesses with me to share some stories of the coalition's current and recent work that ties in, as you're saying, Chair Bray, to so many of the things that are front and center for your committee. And we're hoping, I know you've been very focused on a lot of energy related things in recent days for good reasons, and hope that this will be a welcome shift in gears and change of pace to dig in more on some other aspects of the natural resource side of your purview. Our game plan, if it works for you all, is that I'll provide a brief introduction and sort of set the context, and then turn it over to our other witnesses for the bulk of the time to share their stories about the impact that state investments through VHCB are having for our communities and for Vermonters all across the state. I think you all are pretty familiar with the coalition. We're a group of more than 50 organizations, large and small, working in your communities and others all around the state on the combination of affordable housing, conservation projects, and historic preservation. We're using helping to use the dollars that you and your colleagues allocate each year to VHCB to conserve and restore our lands and waters, create housing, preserve historic resources with the goals of improving the lives of Vermonters and the state's economic and environmental vitality. We've been at this in partnership with VHCB for more than 30 years and have a good track record, I think very impressive track record of delivering enduring results that help to address many of Vermont's most pressing needs, including things that are front and center for you all, like water quality, climate resilience, biodiversity and habitat, sustaining Vermont's working and natural landscapes, as well as critical issues like addressing homelessness and workforce housing, and supporting our communities, generating jobs and economic activity in a whole variety of different ways. And we feel, this work is really more important now than ever in this moment with the pandemic, helping Vermonters to get through the challenges that the pandemic is presenting in so many different ways, and to position Vermont for a vibrant, resilient, and equitable recovery, both economically and environmentally. So I want to thank you all for your past strong support for VHCB funding. You've been among the real champions for it over time in the Senate. And I particularly want to acknowledge Senator Westman and Senator McCormick, your leadership in helping to secure additional funding 2 years ago for several critical so-called legacy forest land projects that were hanging in the balance at that moment, and the additional funding that you and your colleagues on the Appropriations Committee helped to deliver in the conservation of those 5 big projects around the state. They're just a few among the many, many projects that have been happening that are providing now permanent benefits for Vermonters.
It's very nice to be thanked. It doesn't always happen. So thank you for the thanks.
You're welcome, and it's heartfelt. And I wish, we'll hear actually about more about one of those projects in just a moment from one of our witnesses, Peggy Smith from Stowe. So I'll give you an update on where that stands. For FY22 ahead, the coalition, the whole coalition, both the conservation and housing, are asking for your support of the governor's recommendation of $34.8 million for VHCB to continue and to accelerate the vital work that are going on through VHCB and with all of us in the coalition on both VHCB's mission, recognizing that it is more important now than ever. Also want to note that we're asking that the funds allocated to VHCB be able to be used flexibly for conservation and housing as needed, based on the community needs and VHCB's assessment of that. The language in the budget recommendation from the governor specified $20 million in one-time funds to go just to housing. But we rely on and depend upon VHCB staff and board leadership to assess what the critical needs and opportunities are in making their decisions about how the funding should be allocated. I'd encourage you to check in with Gus Seelig and Jen Holler from VHCB for more on this, if you'd like. And then before turning it over to our witnesses, I just wanted to touch for a moment on one other thing, which is the issue that it has come so much to the fore, better late than never, but long overdue, of equity, diversity, inclusion, and justice, and the imperative for us all to work to reverse systemic racism as it exists in our society. This is critical to the work of our coalition's members, as it is to so many aspects of life and work here in Vermont and across the country. VHCB projects and our work help to address these issues in a variety of ways, from providing affordable housing to diverse populations, folks in lower economic brackets and historically marginalized communities, in the conservation realm, in the way in which, among other things, permanently conserved lands provide important opportunities for access for all Vermonters in their communities and around the state. So we feel like we're already making some important contributions to get at these really core issues, but we recognize that there's more to do. We know that there are a variety of policy initiatives under consideration in this realm, including a new bill in the House that you're probably aware of, that deals with access to land and housing in the Black, Indigenous, and people of color community. Our coalition hasn't had a chance to discuss the specific provisions of that bill or of other policy initiatives, but I want to let you know that we applaud the focus on these issues, and that our individual members are engaging on these issues in a variety of ways, with outreach, listening, really educating ourselves. I think it's critical. That's the starting point for all of us: educating ourselves, learning, and listening, and make adjustments in our work to address systemic racism and be effective anti-racists. We're committed to this, and we recognize that we have much more to do. So with that, I want to turn it over to our witnesses for the bulk of the time. First up, we have—
Can I jump in with the—
Oh, sure, please do, of course.
Just a quick question. Did the governors recommend include the full statutory appropriation to the trust fund, Housing and Conservation Trust Fund?
Thank you for the question. It's a good and important one. The answer is a little bit complicated, but the total amount that he's proposed, 34.8 million, actually is more than what the full statutory share from the property transfer tax would be. So as I think you all probably know, there's been longstanding state statute that calls for essentially half of the annual revenues of the property transfer tax to go to VHCB. That hasn't happened in years and years. And this year, the property transfer tax revenues are at an all-time high. They're skyrocketing because of the spike in activity in the real estate market that's happened over the course of the past year with people coming to Vermont. find a safe haven from COVID. And so the full statutory share this year for FY22 would be $29.3 million. As I mentioned before, the governor's proposal is for $34.8 million. So it's about $5.5 million more than the statutory share. 20 million of that is one-time dollars. And we feel like it's entirely appropriate to take advantage of some of those one-time funds to help advance and accelerate the work that our coalition in VHCB does. So it's important it is one-time money. We do feel that the additional funding beyond full statutory funding is appropriate, particularly in this moment with the pandemic and the imperative to do additional conservation and affordable housing work as quickly as we can to benefit Vermonters in a whole variety of ways.
Sure. You were talking about flexibility in terms of, sort of knowing the needs and opportunities that your organization sees best. So having that sort of flexibility. Are the dollars that would flow from the statutory allocation to the trust fund more flexible than the additional money that the governor has put in on a one-time basis?
Based on the language, as I understand it from what's in the governor's proposal, the answer would be yes. So the proposal includes $14.8 million in a combination of property transfer tax revenues and capital bill dollars. As you probably know, VHCB for years has gotten some of its funds through the capital bill. So 14.8 million would be from that, and that would be up to VHCB to determine how to allocate. The 20 million one time in the governor's recommend is targeted for affordable housing, but again, we're advocating strongly that there be flexibility given to VHCB to determine how best to use those funds.
Okay, great, thank you. I just wanted to get the baseline set so we know what we're comparing things to.
Yeah.
And sorry, I interrupted you. You were about to introduce your colleagues.
So
not a problem at all. It's helpful.
Can
Please.
I just
Senator
ask?
Westman.
So since all money's fungible, and the money that you get in your base appropriations is through the transfer tax. If we put strings on the one-time, if the governors put strings on the one-time money and say it's going to go towards housing, could you not take the money, the other money that you're getting, and direct that to other programs?
Thanks for the question, Senator Westman. I guess I would defer to the leadership of VHCB to answer that question in a more definitive way than I could. So, they're the ones who would be better positioned to answer that. I would hope that there would be that sort of ability to move things around. Again,
because if they can do that, then I'm not inclined to fall on my sword over some language. If they have flexibility with the other money, and we're getting money to VHCB in the overall, that's a fight I don't want to have if that's the case.
Right. Okay. Sounds like we'll follow up with Mr. Seelig and Ms. Holler. Okay. Thank you.
Thanks for
the
question.
We're going to get to your guests, your colleagues. Thank you. Great.
So if I can maybe just briefly introduce them and then hand it over to our first one, who is Peggy Smith from Stowe, who's here to speak about one of those legacy forest land conservation projects that I referred to a couple of minutes ago, the Brownsville Forest Project in Stowe that was funded in part with the supplemental appropriation in 2019. And then after Peggy, we have Dave Hydash, who's a board member with the Vermont River Conservancy and also author of a book that I look forward to reading called Take the Plunge, A Guide to Swimming Holes in Vermont. And he'll be talking about river access projects that VHCD has helped to support over time. And then third is my longtime colleague at TNC, the Nature Conservancy, John Binhammer, our protection director, who will be describing a project that is happening right as we speak for a long sought expansion of the Alburgh Dunes State Park up in Alburgh that we are collaborating with Vermont Forest Parks and Recreation to advance. So, and as they go, I'm gonna, if it's okay with you all, I'll share my screen. We have a few slides with photos and a two for each of the projects. So I will pull that up and encourage each of the witnesses just to let me know when I should be moving forward through each of the slides. Thank you again very much, Chair Bray and the committee, for your time and interest in all of this.
So to your three colleagues, welcome Senate Natural Resources and Energy. Thank you for making the time to come in and sharing the work out there. You know, we end up looking at paper all the time, words in black and white between the four corners of a page, but you know, it's nice to see what we do in terms of budgets and programs turns into out there. So thanks for the visit. And just so you know, Mr. Huffman, your screen is not up yet. And here it comes, all set.
Okay, I think, Phil, are you still on, or am I supposed to go?
I think you are up,
You can,
Ms. Smith.
you can go, Peggy. Thank you.
Okay, all right. I'm Peggy Smith, and I may not stay on the whole time because I'm just a week out of knee surgery. So I'm sitting here with my leg up and gets kind of uncomfortable. I am and have been a realtor and owner of Caldwell Banker Carlson Real Estate in Stowe for 45 years. I've been a member of the Vermont Nature Conservancy and the Stowe Land Trust, the Stowe Conservation Commission, and have had an interest in Vermont and its natural resources ever since I went to camp back in 1953 on Lake Willoughby. So I am very interested in not just in what happens in Stowe, but what happens in the state of Vermont. I think that with this pandemic that we have had, I have seen firsthand, first of all, the real estate market explode, but secondly, the importance of all of these lands that we have preserved throughout the years. And I want to speak to the Brownsville Forest Project, which we accomplished 2 years ago. And I have been walking all the rail trails since March and Sterling Valley, all the different preservations throughout northern Vermont. And every time I'm out there, I am just awed at what we have accomplished in this state and what we offer so many people. And Phil was talking about the diversity. And yes, we do not have great racial diversity, but the one thing that we do have that I think many other states do not have is the diversity of land and the freedom that people have to be able to explore Vermont and to find solace in their everyday life, which has obviously been challenging for a lot of people. And so, you know, to be very blunt about this, I'm here to testify to ask you to, you know, appropriate the money that has been put out. I think it's 34.8 million, as I recall. Just to give you some background, Genevieve Story bought this land back in the 750 acres back in the 1950s. I came to Stowe in 1976 and happened to have purchased a piece of land where it says private property I owned a small parcel that was accessible to this 750 acres. And so I spent a lot of time legally or illegally walking this land, although Genevieve was very generous with allowing people to go on it. It became a really important background for me in my neighborhood. But then I went on the Nature Conservancy when Bob Klein was there. And this property, and John Benheimer will probably back me up on this, this property has always been a source of has always been a source of contention as to what was going to happen to it. And so over the years, it's been discussed by the Nature Conservancy. There were people that talked about it going to the Catholic Church. And then finally, it became available through the nieces and nephews after Genevieve Story had died. At that point, the Stowe Land Trust was getting very involved in it. And we were able to find a donor that was able to donate $5 million, which was really fabulous. At that point, we had we had to raise $750,000, and that's where your appropriations and many of the private owners have been able to come up with the money. So this all happened the year, I say it was 2019, it could be corrected, but I think it was in 2019. And we closed in it in July of that year. So 9 months later, we are into the pandemic in March. And I of course, think that I'm never going to make another sale because of the pandemic. And then as it moved through the summer, I realized, oh my gosh, not only am I never going to make a sale, I've never been busier in my 45 years. And land is totally disappearing here in Stowe for people to purchase, to build, and there's like no inventory for people to buy. And I look at this piece, and if you look at it carefully, you'll see there's the Brownsville Road, there's the McCall Pasture Road on here, and there is a red dot that goes throughout the property. This property, out of all the properties in Stowe, and I've sold many of these large developments, had the potential of being one of the easier properties to develop. Which, when I think back, I think we just were really lucky that we got this done, because at this point, I think a developer would have paid close to the asking price, which was $10 million for this, and develop this so that they would be able to provide land in Stowe for the wealthy to be able to come and purchase. What has happened is that now the regular Vermonter is no longer able to afford to purchase in Stowe. It's not a great situation. I can't say that I'm very happy with it, but there is still outlying areas that that are accessible for purchasing for middle and low income housing. But that brings me to the fact that here is a piece of land that all Vermonters can go on. And there's snowmobilers on here, there's people that are walking, there's snowshoeing. I believe in many areas there's hunting, because there's a hunting camp up there. It accesses for all of the diverse population of plants and animals, and accesses to the Worcester Range. So I sort of look at this as a term that in this time that we're in, as this is really what the Japanese have a term for it called forest bathing. And forest bathing is really being able to get out into your natural state and take this quiet, this beautiful solitude, and give you solace to be able to continue throughout your life. And I think that many people, especially people that have lost their jobs and aren't as fortunate as I am, have taken to the hills and have taken to these pathways in places like the Brownsville Forest, and really been able to, they may not be able to afford anything else, but they can afford to go out and enjoy this without having to spend one single cent. And I think to get to really find a renewal of life here. And so what I encourage is that I think there's two things. One, we need to continue to bring affordable housing to the state and as close to these places like Stowe that we can get them so that we will have a diverse community, which is a very big concern of mine. And also to be able to purchase land such as the Brownsville Forest, to be able to provide for Vermonters what they came to Vermont for, which is this beautiful, as you see in front of you, green, gorgeous forest with meadows.
Well, thank you very much. And thanks for hanging in there, even though your knee is probably telling you to do something else entirely right now. So we hope you heal fast. Thanks for your work on this project. And we should move along. I just want to let you know that at 11:55, we have a hard stop as a committee. So we still have 15 more minutes, but I just want to let people pace themselves.
Great, thanks. Chair Bray, thank you, Peggy. And so next up is Dave Hydash, as I mentioned before, from the Vermont River Conservancy Board. And Dave, let me know when you'd like me to start your slides.
Okay, I'll give you the cue. Hey, good morning, everyone. My name is Dave Hydash. I'm the treasurer of the Vermont River Conservancy. I live in Cheshire, Connecticut, though my heart lives in Vermont. I'm here to talk to you today about kind of my life story and how VHCB funding has impacted me personally and how it has impacted all Vermonters. So let's dial the clock back to 1998. I came up to Vermont on a vacation. My wife and I came up to do some biking, some mountain biking. And we heard about and happened upon a swimming hole in the New Haven River in Bristol. And we arrived there at the bank, and I remember seeing the water, and I was just stunned. It was the most beautiful blue-green water, so clear, so inviting. I knew that I just had to be in the water. It was something that I thought I'd been looking for my whole life, but I never knew I was looking for it. So we went swimming, we enjoyed ourselves, and we spent the rest of that trip going to other places that we heard of swimming holes in New Haven River and other rivers too. And it was something that we were just taken with. So this led to other vacations. We would come to Vermont and take specific swimming hole vacations. This kind of became our universe for a while. Going up, spending 3 or 4 days there, visiting all these beautiful places. And it was so exciting for us that we began to take our nieces and nephews with us. And this turned into an annual vacation for us. We would take swimming hole vacations, going to 3 or 4 of these places, getting exhausted. As you know, the water is quite cold and it's quite exhausting being in rivers all day, but we loved it. And we continually scheduled these vacations. And over time, I've probably visited about 100 different swimming holes in Vermont. They're that amazing and they're that big part of my life. So I wanted to share with you a couple of the photos, Phil, and you can cue up the first one of 20 foot of some of the places that we would visit. And as I went to these places, I would kind of begin to see how they fit into the Vermont communities and what they meant to me and what they meant to others. And this is called 20 foot. It's in the Black River in Reading. And you can see that water there, so inviting. This is a place of quiet. It's very close to the road, but it's down a very steep ravine. And when you go there, you are just enveloped in this silence that is just interrupted by the flow of water through that tiny gorge. So I hardly ever see people there at this place, but I do know it's visited. And anyone who's there seems to have the same attitude of wanting this place of quiet. Another place that we went to is called Buttermilk Falls, and Phil, you can show the next photo here. And Buttermilk Falls is very different than 20 Foot. It's in Branch Brook in Ludlow, and it's like a social hub. It's very large. Many people visit there. Kids playing, dogs playing in the water. It's a perfect place to go and spend an afternoon with the family. And it's just a large, inviting place that is very heavily used. Then there's another place called Journey's End, and it's up on Footbrook in Johnson. And you can see here, it's a very dark place. It's kind of in the middle of the forest. And if you remember the children's book, Where the Wild Things Are, this is probably where those wild things live. Journey's End is about a 20-minute hike from the road. It's in the middle of the forest, and it is just a jewel of a swimming hole. It's one large, deep pool. And if you look closely from the top of the rocks when you're there, you can actually see the trout swimming around in the hole, and then you can jump in right on top of them. So these places, they have a very therapeutic benefit for me. When I go there, I like to spend time in the water and feel the river flowing through me rather than around me. And as I would visit these places, I would see other people there, and I realized they're hubs, they're places people go to be alone, they're places people go to be with others, they're places people go on vacation. People go there for different reasons, but they all come to a swimming hole. The fun thing about them, or the interesting thing about them, is they're available to all. There's no admission fees, no reservations, no tickets you have to buy. You just go there and you enjoy these swimming holes, and then you go home. So after years and years of visiting these places, I started to feel a little bit guilty. I was thinking, I take from these swimming holes, but I don't give back. So I started to do some research, and I found the Vermont River Conservancy. And the VRC works on projects to protect access to swimming holes, among other things. So I became more interested and worked with the VRC, and they asked me to be an advisor to the board, and then they asked me to be a board member, and then I stepped into the treasurer role. And it was as treasurer, I began to realize that what I've been benefiting from is the work of the VRC. So each of the holes that I've just showed you, these swimming holes, they were under threat of being developed. Someone was going to build a house on these properties and have this swimming hole all to themselves for the rest of their lives. But that didn't happen. The Vermont River Conservancy stepped in and bought the properties, conserved them, provided perpetual access to the public, and then turned them over to the town for ownership. The key here also is each of these properties, the projects were funded by VHCB grants. So when I was traveling through Vermont and swimming at these places, I knew that there was some benefactor. I was the benefactor of someone else's hard work. And it was from the Vermont River Conservancy, and they were funded through VHCB. So since 2001, VHCB grants have funded about 23 projects for the Vermont River Conservancy. And these swimming holes are there forever, just waiting for you and me and for anyone to just come visit them. So this work is so important, and the funding from VHCB is so important to the VRC to make these things happen. And that's really how I feel that I've found that I've been impacted by VHCB money. I didn't know that, but it was that money that was being turned into the ability to go to these properties forever. That's why I'm here today to ask you to support the governor's recommended budget of the $34.8 million for VHCB. That work is so important to me and all Vermonters and all people who come to vacation in Vermont to have access to these places and enjoy everything that they have to offer. So thank you so much for your time, and I'd be happy to answer any questions you might have.
Okay. I'm not seeing any committee questions. I live in Bristol, right near that first swimming hole on the New Haven River. So I can appreciate I'm not sure exactly which one you're at, but there's quite a few nice spots.
Yes,
Well,
there
I look forward to seeing your book when it comes out, Senator McCormick.
I have gone swimming at 20 foot and at Buttermilk Falls, and they're indeed beautiful.
aren't they?
Thank you. Thank you. Yeah.
Mr. Binhammer.
Thank you. My name is John Binhammer. I'm with the Vermont chapter of the Nature Conservancy, and I have been lucky to work in the Nature Conservancy for almost as long as VHCB has been around. So not quite, but almost. And so I wanted to thank you for the opportunity to provide testimony regarding the Housing and Conservation Board's impact on Vermonters' quality of life, as you've already heard. And I'm certain you are aware of all the enhancements to our quality of life that VHCB has been a part of, both affordable housing and land conservation over its 33 years of existence. And I wanted to share with you a recent project that exemplifies VHCB's longevity and continuity of purpose, and how those important aspects are important to Vermonters.
The Alberg
So,
Bluff.
But
The Alberg Bluffs.
yes. So I want to take you back to the 1990s. And at that point, the HCB was less than 10 years old, and several once-in-a-lifetime opportunities arose to conserve highly significant Lake Champlain shoreline properties. Two of them, 180-acre Night Island and 608-acre Alberg Dunes, were purchased by the Nature Conservancy and conveyed to the state of Vermont to create two new state parks, providing the public unparalleled access to the natural resources of the islands region, which could not have occurred without significant VHCB funding. So Alberg Dunes State Park is only one part of a larger landholding of the family known as the Phillips family. And in 1996, the state acquired 600 acres of the Phillips family land, which included the large beach and about 500 acres of wetland behind it, leaving the family with 160 acres, which had been divided into 16 spaghetti lots, each with 300 feet of shorefront. A purchase of the entire property at that time was beyond what could be funded by VHCB or any other source. So the thinking was that the state and the Nature Conservancy would discuss adding the rest of the land to the state park at some point in the future, negotiating with the Phillips family and trying to figure that out. After the death of the patriarch, we began negotiating with the estate and reached a verbal agreement in 2003. But after many discussions and a VHCB award of $500,000 to the project, the deal was never inked back in 2003. So 17 years later, in early 2020, after being held for 17 years in the estate, we were told that the probate judge had appointed a new executor and given the estate 6 months to sell the property. So we hurriedly engaged 2 appraisers to arrive at a value for the property, and after lengthy negotiations, secured a contract at the appraised value of $1.1 million. And so we're asking VHCB for $450,000 for the project. Half of the rest of the money will come from the Land and Water Conservation Fund, which is a federal source. So if you'll move to the next slide, Phil, this 160-acre tract, these are 2 maps of it that show you where it is and a little bit more about it. It includes 4,800 feet of frontage on Lake Champlain, part of a sand beach, long shale beaches, 20-foot high shale bluffs, gorgeous views of Isle La Motte and the main lake, and 80 acres of forested wetland, 15 acres of upland meadows, and the rest forest land. A preliminary ecological survey of the parcel discovered the presence of 25 rare, threatened, and endangered species, 2 of which were only previously known, and 16 natural community types, making this one of the biodiversity hotspots in the islands region. So without long-standing efforts to conserve places like Alberg Bluffs for Vermonters, and Phil, you can go ahead and just show some pretty pictures of this place because it is just strikingly beautiful. And you can just keep going through them, Phil. Thank you. Without VHCB's longstanding effort to conserve places like Alberg Bluffs for Vermonters, together with their dedication to conserving those places that support the highest biodiversity and recreational access for Vermonters, places like Alberg Dunes State Park would be developed. As I said, it was spaghetti lots, and public access would be denied. Thus, we encourage your support for VHCB's work now and in the future. Thank you so much. And I understand we're very short on time, but I'd be happy to answer questions.
Okay. Well, that was a perfect length tour, Senator Campion.
Well, I just want to say those images are stunning and really illustrate the incredible work that you all have done. So thank you for that.
Senator Westman.
I just want to say what great work this is, and both the Brownsville and Journey's End. Journey's End, I swam there when I was in college all the time, and I was at the ribbon cutting for both when they were done. It's one of the few times when you get to be a legislator and you feel tingly all over when you go to an event.
Yeah, well, yeah, I'm just going to echo what you just heard. It's like when you see the work you're doing, it helps me appreciate how this is irreplaceable sorts of resources that when you lose them, you don't ever recapture them. So conserving them from the beginning is really a great gift to everyone in the state and everyone who visits. So thank you for your work. I know it takes, as you pointed out for Alberg, you have to be tenacious. And I appreciate that you've been around for a long time and you've been tenacious all the way through. Senator Westman.
Well, I just say, that the Brownsville piece, they had to be tenacious too, because it took a long time. I walked those roads with Cam Page years ago, and it's a beautiful piece. Peggy, your pictures didn't do it justice.
Okay.
Well, if I can just jump in quickly,
yeah,
Chair Bray, to say thank you to those of you who have just spoken up, and thanks to our witnesses. And I think you all have just put it so beautifully in terms of the importance of these sorts of enduring projects. And that I think, in terms of the VHCB investments in all of these, they're really modest. It's a small portion of the overall project budget. For Brownsville, it was $175,000 out of about a $6 million total project cost. It sort of staggers me, frankly, that about that $5 million grant that Peggy mentioned and whatnot. But they're great illustrations. Same with Alberg server projects that we heard about, how a modest investment by the state can yield transformative results, securing vast amounts of money from other sources. So thank you for everything that you all have done to help make it possible.
Well, I think besides the sort of leverage, my impression is, from having served on our land trust here in the county, is that when VHCB and the Housing and Conservation Coalition and all the VLT traditional partners come to the table, that it brings credibility to the proposals and helps engage other people, because they start to feel confident that it's a well-vetted, well-developed proposal, and then other money flows in to support the project. So thanks for you established the beachhead for a lot of other people. All right, well, with that, committee, it's 11:56. I know we have 4 coming up, and a number of people have noontime meetings. So